All right, today we're talking about credit score. So if you're watching this video, chances are you're probably looking to get a car, thinking about getting a car in the near future, and kind of looking at a higher value car, at least to you, right? Maybe your first car, your second car, or you're wondering what kind of credit score you need in order to get financing for a Scat Pack, Hellcat, whether you're looking at a 5.0, Camaro, whatever you're looking for, right? I'm guessing my age group here is probably between like 18 and 25, somewhere around there. So first thing you need to consider is that, you know, being younger, like pre 30 years old, especially, you're going to have, whether you like it or not, a bigger down payment. Probably just because that's what the banks are going to like to see. And honestly, you're probably going to like to see it more too, having a lower monthly payment. So when you're younger, I think that, well, you're going to have different views on this, and every situation is different. So if you're looking at maybe with just going lower payments only, if you have a high interest rate, and if you stretch out your loan past the 5-year point, like 6, 7, I think they even do like 8 years now. If it's a classic car, I think they're even doing like, you know, you can get kind of like a collector's type loan for like, you know, over 10 years. So if you're looking at payments, I think for if you're younger, they probably won't really stretch it out past 75 months. At most places, so you would get like 6 years. And of course, after you pay interest on that, it's going to be even higher as far as like the dollar amount at the end of the loan. So say you're looking for like a $50,000 loan, you know, be ready to pay like, you know, $75,000 or something by the end of the term. So you're paying $75,000 total for, you know, 6 years from now. Is that $50,000 car going to be worth $75,000? No, probably not. The odds that you're going to keep it really, really nice without driving too many miles is pretty low. And it's also assuming you're buying a used car. You're probably not going to be buying a new one. At least I wouldn't buy a new one at that age. I would say you're probably looking at, you know, depending on your situation, how much you want to pay per month. You know, and if you go with the lowest amount per month, you know, can you afford that? Can you afford $800, $900, $1,000, $1,200, $1,500 a month? You still living with mommy and daddy? You know, because your mortgage, your rent payment, well, hopefully maybe you have a mortgage, but if your rent payment's $1,400 a month, can you afford a $1,400 a month car payment along with, you know, I think my insurance on the Charger is $180 a month, and I think on the Durango, both the Hellcats, I think the Durango is about the same, maybe $200 a month, so maybe $380 a month. I think that's pretty good, but I'm in my 40s, so I haven't had any accidents or anything like that. No speeding tickets, so it kind of depends on a lot of different factors. But if you can afford it without stretching yourself too thin, like, you know, you don't have to fast 3 times a week and miss dinners and, you know, skip out on some bills somehow. If you can afford it and still be comfortable, have a comfortable way to live, then, you know, go for it. But don't sacrifice normal day in, day out type of, you know, expenses. You know, there's always expenses that you don't think of. Every month there's going to be expenses that you don't think of, like Christmas, for example. If you're buying your car in June, you're not thinking about how much money you're going to need in December for Christmas for your family, if you have kids, whatever. So practically thinking, I guess maybe that's why a lot of people just go ahead and steal these, is because they don't want to save up the money or have a good credit score in order to get one. But ultimately, if you're younger, a lot of that factor is going to depend on how long you've had certain credits, cards, certain a job. Having a job is pretty important. How long you've had that job. So I think most places, especially now, you're gonna have to at least be there a year and make a decent living. So let's just say, you know, you make $22 an hour, make $45,000 a year, and you've been there over a year, maybe 2 years even better. But if you've been there over a year, make $45,000 a year, and have a decent down payment. So let's just say 10 to 20% down. I don't think you're gonna have any problem getting a car, for, you know, with a 650, 670 credit score, and have sort of the payments that you're kind of looking for that you'd be able to afford, and still you might be kind of like balancing it out right there, and needing a kind of a side hustle, way to make some extra income. These days, I can't remember the statistics on it, but how many percentages of families have side hustles? I think it was like 40 or 60% of families like have some kind of a side hustle in America. Yeah, I have a primary job. I'm self-employed for 15 years. And then we also have a couple different ways that we also have like side hustles to make extra money. I work on some people's cars, doing some aftermarket type stuff. We also have a couple different businesses, but all these things together, you know, make ends meet, and obviously pays for the cars, house, that sort of thing. But if you're younger, you need to be thinking this way, at least somewhat entrepreneurial. I know a lot of guys think they're going to make millions of dollars on YouTube. Most of the time that's going to be just a pipe dream. I'm doing this for fun and to connect with people, and maybe to help one or two people. However many people see this, that's great. But for the most part, keep in the back of your mind that your situation is unique and different. I mean, that's why when you go in to apply for a loan, maybe to get a car, you know, they have to take down all your specific information. The bank looks at it and determines what they're going to do based on all these different criteria. And because each one is different, it's not just cut and dry. So, I mean, if you're 23 years old and have the same credit score as a 30-year-old, just say it's 670, and you know the 30-year-old may have an easier time to get it. They may have more credit history. They may have had a car before that they paid off already, and the banks look at that and say, okay, they handled a $600 a month payment on this car. I think they can handle an $800 a month payment on this car. So if you've never had a car before, never paid off the balance of a car loan, you have to start smaller. So in order for them to, and then they'll balance it out. Okay, so you have a big, huge down payment, like $30,000, then they may give that to you. So it just depends. You can't usually just walk in with, you know, $1,000 down and have a 600 credit score and expect to get not just a car loan, but a good car loan. You don't want to just hop into a car and take whatever payments and then say, oh, well, I'll figure it out every month when the payment comes around. You know, you have to be smart about this. You have to think and plan. Planning is the most important thing. I did a video 4 years ago, so some new things apply now, but back then, I made sure to let people know that, you know, planning, when you go to look at a car, you have to know, use a auto payment calculator to figure out and plug in some numbers, like, you know, do your research as far as like your age and everything, and figure out maybe around about what your interest rate's going to be that you can live with. You know, plug in the amount of years, the amount of down payment that you have, and figure all that in and say, okay, I think it's going to be around $800 a month. Okay, sure. I think I can afford $800 a month. And then, you know, if they take an extra year, you can drop it down and maybe look at it and go, oh, that's $740. That's even better. If you can live with that, but then you look at how much extra you're paying in interest, you know, kind of look at all that stuff. But you have to know what you're doing before you go into the dealership and talk to them about getting a certain payment, because that's the first thing they're going to ask you. Well, how much do you want to pay a month? And they need to lock that number in with you to see how much you're comfortable with. And then guess what? You'll say $800 a month, and they're going to try to get it as close to $800 a month, but it's always going to be more. They're not going to get it really lower. They'll always be more, and they'll say, oh, we got this at $875 or $900. Do you think you could do $900? And then in the heat of the moment, you're going to be all jazzed up about getting this car and say, oh, okay, sure, I could do 900. No, don't do that. You need to wait. You need to be able to go in and do your due diligence and say what you want from this loan that you're going in there for. You need to know exactly how much you're going to pay. You need to know exactly how long you want it for, and don't let them be telling you what you need and what you're going to do. So to me, that's the key, is to have the power to go in there and do what you want done, and don't let them talk into anything different. If they do, you have to be strong enough to walk away. And I don't need this car that bad, or I can wait another couple of months and have an extra $1,000 down, or $2,000 down, or it might be a situation where you want to wait a few months because you need to clean up your credit report. If you've got some late payments on there, the longer that it goes, the better your credit's going to look. It kind of diminishes over time, late payments. But start right now. Know what your credit score is, and you can go into like Credit Karma, of something like that. It's free credit reporting that you can look at least get an idea. It's not a FICO score, it's a Vantage, which is it's set up differently. When you go to a dealer, they're going to look at your FICO score, but at least you can kind of look at where you're at as far as a basic sort of credit score, along with an idea of your late payments and things like that. Hopefully you're not late on anything. How much debt you've had, how many hard pulls you've had on your credit in the past couple of years. So all these things have a factor. If you had some hard credit pulls, like 3 or 4 of them within the last 2 years, but 1 or 2 is getting ready to fall off in a couple months, you might want to wait a couple months to get a car until that catches up and raises your credit score. And excuse me, there's also some companies out there that'll help clean up your credit score if something on there that's bad, or you have any derogatories on there. So they can look and see if there's any inconsistencies on your credit report, that they can have things kind of written off for you. It may cost $200 a month, roughly, for that kind of a service, but it could really save you a lot of money in the long term of your loan, especially when the banks look at if you have these certain things wiped off, you could save $5,000, $6,000, $7,000 over the course of interest over the whole span of your 5 or 6 years making payments. So it's definitely worth having your credit cleaned up, or having a lower credit score before you start, not just for a lower interest rate, just by kind of waiting or letting, say, a hard inquiry fall off, but actually getting the late payments. Maybe some of those can get taken off beforehand. You can try doing that on your own. You can do your research, but it's faster and more efficient if you can just pay a couple $100 a month. It's worth it too. The extra couple $100 for maybe 3 months of someone trying to clean this up for you will be worth it. So that's something else to consider. Also, I think Capital One has, if you have Capital One. If not, you can also do it. I think they do a soft pull, which is so they won't do a hard pull, but they can pre-approve you for a certain amount on a certain car you might be looking for. So if you go in, and they'll have a database of different cars, like 40,000 cars you can look at, and then so you can pick one around your dollar amount, and they can pre-approve you for that and show you exactly what interest rate that you can get at that time. And at least you can have some sort of printout or evidence that, hey, Capital One's willing to give me 7.5% for $50,000 or $45,000 or whatever. And you can at least go into the dealership and say, hey, look, for this car, for this amount, it could be at this dealer that has this car, so you can have this pre-approval before you walk in, and then show them your interest rate, because dealerships are making money off of you multiple ways, and this one here specifically being, they'll farm out your information to these different banks, and they'll try to, get a higher interest rate from you and get a bigger kickback from certain banks, making money off of you. And you want to be able to go in there, even if you have one bank that's willing to finance you, and you have proof that they want to finance you. That's all you need. Go in there with that piece of paper saying, hey, Capital One, for example, is giving me this deal, so I'm going to go ahead and go with them. on this, and we'll just do all the paperwork, if you can live with that, obviously. And then most of the time, 99% of the time, the dealerships have so many connections with, multiple banks, usually a dozen, 24 banks. And then they'll look at that, send it to some different banks. The bank will come back and say, oh, okay, they beat this interest rate for me that Capital One was going to give me. And you end up getting a better deal anyways. They might be holding back and not give you the absolute best. But if you already had the one from Capital One that you were able to live with, then the other one is obviously going to be that much better. At least you have options. You need to go in there with some power, and don't just let them tell you what you're going to do. You need to know what you're going to do before you go in. I hope I made that clear. I went on a little bit there, but you need to be certain that, and I want you to be certain that you're not going to walk away out of this, driving out of there with this car of your dreams, right? All happy, and then 2 months go by and you're kind of like, oh crap, that was a mistake. I can hardly make my payments. My insurance is through the roof. What did I do? And then, after 3 months, 4 months, you lose your car. And then, you take a bigger hit on your credit because they had to repo your car. So you're in a bigger mess than when you started, just so you can drive a car for a few months, right? So that's not good for anybody. So I just want to make sure you do your homework, know what your credit score is, and then have the power when you go in to the dealership. That's it. Thanks.